folks, welcome to episode 4 of RocketPod, the podcast for business and charity professionals looking to expand their CRM knowledge to achieve success. For this conversation, Rocket CRM have invited global financial services strategist and digital transformation expert Chris Hess onto the show to discuss the role of CRM in financial services and the radical changes that this very broad sector is currently experiencing. Chris has a wealth of experience helping providers accelerate their digital adoption and shares valuable advice on how other providers and intermediaries can begin their digital upgrade in a more customer-centric way. Sounds simple, but it's easier said than done. If you appreciate what we have to say, click that like button and subscribe. Right then, guys, this is our newest episode of RocketPod, delivered by the team at Rocket CRM. You're listening to myself, Natalie Silver. We've got Kyle McKee and Ian Wicks, the usual suspects. And of course, we're going to be talking about CRM and data because that's what we do. So today, rather than zooming in on a specific technical topic, today we're kind of looking at CRM in practice in general. We're going to be looking at CRM as a key tool in digital adoption. I think everyone will agree that back in 2020, we were plunged into this whole new world and way of working. And many businesses that weren't used to using tech on a day-to-day basis had no option but to adapt and look at digital adoption to be able to continue operating their businesses and to stay connected with their staff, stay connected with their customers, and basically to survive. We know that the lockdown did drive UK tech adoption massively. Lots of reports and stats delivered on that. You know, I was reading one report by Sage that was published earlier this year that stated 92% of SMBs see technology as critical to their survival. Whilst we know some industries are probably further ahead than others in terms of being able to digitise their customer experience and the way that they communicate with customers, even larger businesses can struggle in specific sectors. So today we're actually going to be looking at the financial services industry. This is an industry where large swathes of that sector are massively playing catch up in a bid to meet customer expectations. While some might say financial services and retail banking, for example, they do quite well, there are other areas of financial services that are still way behind. And we're going to be speaking with Chris Hess, who is a financial services strategist and digital expert. Chris has held a number of senior positions across some of the largest names in the finance sector and now owns his own strategic financial services consultancy firm, Hesmur. So over to Chris. What's happening in the financial services? What role does CRM play for FS?
Thanks, Natalie. And thank you for that kind introduction. Yes, I have been working far too many years in this sector, both as a consultant as well as an exec in a variety of different roles here in the UK as well as North America and Asia Pac. Before we even get into CRM, it's probably important to talk about what financial services is and what it means. And there's a whole series of ways that you could divide it up, both on the products they sell, the services they offer, but also the way that they interact with customers. And I think that's something you touched on earlier. There are certain parts of the industry that have adopted more advanced understandings of customers and management of customer data, and then others that haven't. I think the ones that have really excelled are those that have direct relationships with customers. I mean, I worked on some projects in the direct brokerage world 20 years ago that was, probably further advanced than some others are in the industry today. Retail banking, they were slow to start, but I think have come a long way, and particularly in the UK with some of the challenger banks, some really, really interesting stuff happening and how they view customers holistically. But then there's others I think that have struggled a little bit, or are now trying to make advances that they perhaps hadn't made in the past. I think those are the parts of the industry that deal with intermediaries, either their own intermediaries, tied distribution teams, or independent distribution teams. I think it's traditionally been quite a face-to-face business, and I think really customers really value that face-to-face interaction. But there is still a long way to go, I think, in helping those advisors, helping those distribution teams, start to move things forward. So that's a brief intro. So the FS is not one particular sector. It's a whole series of sectors with a whole series of different simple to reasonably complex products with a whole series of ways that people can interact with customers. So I think once we have that, then we can start to look at the history of CRM and FS and why, I guess in some places, it probably has a bit of a bad name. If we look at the distribution models that we have in FS, there's direct to a consumer, And then there's via an intermediary or via an advisor, somebody that's helping you make the decisions on your products. If we go to the direct-to-consumer space, and that's your retail banks or your Ameritrades or your trading accounts, those sorts of things, they focused on this quite early, but it was very much product-centric. So you might have a CRM in place within a particular business unit, but rarely was that customer data linked across an entire enterprise. The problem there is that holistic view of a customer, and people have really, really struggled with that over the years. It was one of my challenges at a large UK retail bank in the last few years, trying to build that more holistic view. Then we move into the intermediated space. I think that's where there's really been a gap. There's been an inability to really understand how you bridge that provider to intermediary to customer gap, both for the intermediaries that manage that customer data and for the providers that are managing relationships with the intermediaries. So it hasn't really matured, although the last few years have really seen, I think, a drive to start moving that sort of thing forward.
Yes, I'm guessing, again, that was propelled by the pandemic, would you say?
I think you're right. The idea of building much more elegant ways of interacting with customers via intermediaries or direct to customer is something we've been working on for years. But it was the pandemic that really forced people to start thinking about new ways of interacting and new ways of supporting those interactions. I did some work at the beginning of the pandemic, and it was at that point it was really just helping advisors engage via these digital channels, things like Teams and how do we use those tools better. I think that's really allowed people to be much more comfortable with using the tools that are at their disposal. I think it's also driven by the customer demand to interact in a way that they want when they want. And that's not something that you can necessarily do with a traditional model. You need to be supported by digital tools that allow you to have those interactions, to look at your balances when you want, to update standard information yourself, but then also to talk to an advisor when you need that assistance on a particularly difficult set of decisions to make.
Yeah, things have changed massively, haven't they? Where you used to go and make an appointment or phone somebody up. You want information now, or you want to see that transparent sort of interaction stuff straight away, don't you?
Exactly. And even just the meeting itself, I think, has changed. It used to be that you had to go into the office. You wanted, the advisors assumed you wanted to go into the office. You wanted to sit down, have the coffee, or go for a beer, or play golf. I think now people are much more focused. They carry a lot of their administrative tasks, managing their own money, and they want the ability to do it via Teams or get online and look at things, or do things themselves when they can.
Yeah, I think probably that's massively impacted again by the pandemic, and that even, say, the older generations, people over the age of, say, 55 plus, in previous years, they may have had less propensity to pick up the laptop or the tablet and have a look at sourcing that financial service information. But now, because they're more used to doing that in their day-to-day world, or whether that's their online retail habits, they're familiar with tech in general, that now their expectations have completely evolved and changed in terms of the way that they access their financial information and support.
It's an interesting one, and stuff I've done research on in the past. It's not really age driven. Was the really interesting thing that came out of it. It's whether they're an early adopter or whether they're a familiarity or desire to interact with technology that really drives that. So you get some people that are in their 20s that don't want to do it that way. I mean, in fact, if you look at the cohort 20 to 30 cohort or 20 to 35 cohort, they're incredibly underinvested in their own pensions. The digital tools are there, but they're not engaging with it. So it's in the end, it's about finding the right way to engage on these conversations that are sometimes a little bit uncomfortable. Sometimes they are face to face, sometimes they're digital, sometimes they're both. And the industry now needs to be able to cater to that desire to interact in a much more flexible way. The other interesting thing is people now expect that you will know certain things. You won't have to ask me all my details every time we talk. You won't have to have me update my address or my, all of those sorts of things. Those things should be integrated. You shouldn't have to constantly ask for the same information again and again. That's just a general consumer expectation, I think.
Yeah, and there's some new regulation as well, isn't there, around that at the moment, I think.
There are a whole series of regulatory drivers, really, that not this is we're talking UK specific at the moment. But the overall trend is that there's a much higher level of a higher duty of care that advisors, that providers will have to ensure that the right thing is done for customers. There's a new piece of regulation, consumer duty, that dropped about a month ago. Yeah, it's yet to be determined what that exactly means in practice, and I think it'll evolve over time. But we can, I guess, at a minimum, expect that advisors and providers will need to know, have a much more holistic view of their customers' requirements, but then also ensure that the products and services that are being offered are meeting those requirements as they change. Again, people aren't static in their lifetime. Their needs, their risk appetites change over time. And doing that in a traditional way, managing your client base on an Excel spreadsheet, just wouldn't be possible. Yeah, that's something important for everybody to really keep in mind as we start to move forward.
I guess it's not just that industry as well. It's everywhere, really, isn't it?
Yeah. No, it definitely is. One of the FS sector that's really interesting to look at that highlights a lot of the things that we've just been talking about is the wealth management sector. It highlights a number of the issues, but also a number of the opportunities that wealth managers have in building much better customer relationships through the use of a broader set of tools. The reason I say this is wealth is direct and direct to consumer, as we talked about before. It's also via intermediary. It often involves both of those models with the same customer, and it affords a whole series of challenges in ensuring that customers are able to navigate those channels seamlessly. We talk about regulation. There's also been quite a focus on this sector in ensuring that they do know their customers, that they know their customers' risk appetites, their objectives, and ensure that the product set across a whole series of product lines is able to serve that. So again, it highlights that product silo challenge that we talked about a little bit before. There's also, I think, an underlying need in that industry, in that sector, to make the whole process much more efficient. That's to ensure the right customer outcomes so that they're not being charged too much for the service, but also to make it a much more pleasant journey. The waiting times, the lags in this industry have historically been quite frustrating to a whole series of customers. So I think it's a really interesting one to talk about as a case study for the use of CRM in every aspect, I think, of that particular value chain. So when we talk about wealth, we'll probably be talking about the providers, the people that manufacture the investment products. We're talking about the distributors, and those are the people that advise on the right products and I suppose sell the products to some extent. And then, of course, the consumers. Now, those three players can actually be made up in a whole series of ways. You can have providers that own distributors. You can have distributors that work with multiple providers. You can, a whole series of different iterations. But it does highlight that really interesting B2B2C conundrum that we were talking about a little bit earlier.
Chris, the way that you've described this, it's actually quite complex, isn't it, in terms of the number of layers and potential touch points for a customer. I'm guessing the challenge for many of these organizations is controlling that and controlling the risk element, because there are different people at different parts of the buyer stage. Is that correct?
It's quite complicated, and it's also not quite complicated. We at FS like to make everything as complicated as possible.
Yep.
If you strip it down, it's about an investment product that's being advised for particular customer years to meet their needs. But there are a whole series of different iterations and different models that you can look at. But really, it's that traditional B2B2C relationship with a duty of care layered over the top of that.
Sure, where the CRM comes in is tracking that journey, right?
Exactly. And traditionally hasn't. There's a huge opportunity for it to, I think, enable that journey and enable much better customer interactions, to minimize the admin. I mean, that's one of the biggest complaints across the sector is the administrative overhead, the regulatory reporting that's required, and what was perceived as a lack of value-add activity when people could be talking to clients, understanding their needs, understanding what products fulfill those needs in creative ways. So being able to automate that is a massive win for the sector as a whole. But it's complicated by the fact that there are these number of parties that sort of work across that value chain. I think it's further complicated by, I don't want to say failed, but unpopular CRM implementations in the industry. Again, CRM isn't new, but in a lot of cases, I think it's failed to deliver what it was originally sold to do.
What would you say those major big failings or the pains of old CRM?
On the surface, the biggest pain is that it just doesn't do what it says. It says it's going to do. It's an overhead. It's maybe a contact manager rather than something that's useful on a day-to-day basis. or it's an MI tracker, that sales folks don't particularly want to interact with because they view it's just there to come down on their head.
Give them extra work. Yeah,
give them extra work. Exactly. It takes them away from doing the thing that they do best, which is dealing with clients. When you look a little bit deeper, you understand that the problems are pretty simple, or the reason for the problems is pretty simple. That it was a solution shoehorned into an industry that didn't fit, that it wasn't built for the market. You're trying to fit a retail CRM approach or model into this space just isn't going to work. Most of them weren't built to address the pain points in the industry, to automate document sending, to collate the customer suitability assessments and risk appetite scores, to manage appointments in a diverse geography. Typically doesn't integrate with all the other tools, the office automation tools that you use within a business.
Which we now know we can do all of those things because we've done it, right?
Yeah, well, exactly. It's my hypothesis is that it just wasn't thought through. These things weren't thought through at the time. They didn't understand what it could do, and therefore, didn't design it in an intelligent way. The other interesting thing, this is probably a recent change in the paradigm of developing systems, but a lot of these CRM platforms were built for large call centers, large sales forces with very, very rigid processes. That was great in the industrial revolution, but not necessarily when we want to be much more tailored to the way that different processes work within businesses. And I think that flexibility is something that really has to come to the fore in the next generation of these CRM implementations. The other problem is just the cost and complexity. Particularly the large firms have spent eye-watering sums on these things in the past. Single customer review projects that I think every bank has had spent many millions, and in a lot of cases didn't fully succeed. So I think that simplicity and that much lower cost of ownership is something else that really needs to be focused on. The other really interesting problem that's happened is that a lot of them are standalone. It might be something that's done within one team, or it's done within a certain area of the business, and doesn't fully integrate with the rest of the business, but also some of the other applications that really could benefit from that richness of information. Marketing automation is a great pair with the ability to deliver the right content to these clients and prospects at the right time. Again, something that's really important in this industry is making sure that you're communicating to people in the right way, that you're not trying to sell complex products to people with sufficient financial education. So that sort of thing, would really benefit from that sort of integration as well.
Do you think it's a lot of this down to the end clients not necessarily knowing what good looks like?
That's a really good point, actually. I think that is absolutely the case. And I'll say that both as somebody that was sort of an exec position, but also somebody that's sat alongside a couple of these implementations now. The typical exec, and I hate to use typical because this is where you get into a lot of trouble, but typical exec probably doesn't really understand the complexity of their own operational processes, and nor do they understand what can be done to fix them. Until you see it happen, it's really hard to see what can be done, what the art of the possible is. The other thing that people don't necessarily understand is the cost of this, the cost of not doing it right. There are probably a few people around the industry that say, we have a CRM, it's good enough, but that's that. But the real cost is hard to see unless you spend time with your colleagues, with your distribution ops colleagues, and understand the pain that they go through on a day-to-day basis. The toggling across multiple screens, the multiple duplicate entry or triplicate entry of data. All those things lead to a poor use of the system, which means you're not going to get the information out anyway. Leads to poor data quality, which again makes the data that's in there kind of useless. The tangible business impact, lost opportunities. Whether it's failing to identify opportunities or failing to convert them because the onboarding process is so bloody difficult. Just the cost impact of having to staff up to support a system rather than a system supporting the staff. Or customer satisfaction because they can't get the answers they want when they call in. The advisor doesn't have the information at their fingertips, so they can't walk them through the process. And I think one of the things that we really have to be mindful of going forward is not having that information base means that you can't evidence that duty of care to your clients and customers. You need that ability to bring that story all together to be able to do that, to service them in the right sort of holistic way, but also to be able to evidence it when the regulators come calling.
I guess that's growing in importance, really, isn't it, Chris? The duty of care. And there's going to be more and more pressure on financial services and especially wealth to pull the socks up, as it were. When you were talking about kind of the cost of poorly implemented CRM and inefficient CRM, to what extent does the sector adopt lean practices? So is it common practice to have a lean practitioner to come in and look at all of their processes and how that's integrated into their systems? And do they ever take a step back and ask, can we do this better?
So I'll answer like somebody that's been in the industry for a while, been lean to death, but are they the right processes, I guess, is the question. Yeah, I think banks and insurance companies and asset managers don't have trouble hiring consultants to come in and lean things. But I think it's that bigger view, that top-down view that's still needed to see how you can do things more efficiently. And it has to evolve as well. I think anybody that's been through a lean program knows that it's not done at the end of the project. For it to truly succeed, you need to be thinking that way going forward. And I think that's where the flexibility of the system is really important as well. That as businesses learn more efficient ways, better ways to interact with people, they need to be able to adapt the system to support that. And that's without going through lengthy change management committees and prioritization exercises.
Yeah, it's about being able to sort of move in an agile way, really, isn't it? With more modern platform than perhaps has been used in the past. Exactly.
Yeah, truly agile, not just agile on the box.
Yeah. Not just talking agile, yeah.
Okay, Chris, so you've made it really clear that there's a lot of change happening in the sector right now. There's a lot of pain points that need addressing. How do they go about it? What's the solution?
So I think the solution's simple, but it was going to take a lot of hard work and persistence to get it right. But I guess even before we get into what the solution is, I think one of the things to think about is why now? Every company will have a whole host of things that it could be working on, could be focusing on, but why should we be thinking about this now? And I think for me, it crystallized in work that I've done over the last couple of years. The digital agenda is accelerating. People are very keen to move forward with with an aggressive digital strategy, giving advisors tools to interact better with customers, to better understand holistic needs, to minimize the time on the administrative tasks so that advisors can spend more time with customers, and to build really very rich customer insights. But in working on a lot of that, those sorts of projects, particularly at the strategy level, one of the things that we've come across is that the building blocks just don't seem to be in place in a lot of places. They may have a CRM, but it's not used in the right way, not adopted by people, or they don't have one. They're still managing off of spreadsheets, or have a CRM that actively works against the business. The building blocks around core customer understanding and the systemization of the management of customer data and customer information just isn't there, which means that you can't do a lot of the other cool stuff. Without that core backbone, you just can't do it. That's the reason why we should focus on it now, that it's the core to doing everything else that you want to do. And there's lots of different ways to do it and lots of different systems you can use, but without that core customer data repository and way of managing those interactions and making sure that customer data is up to date and relevant, and without that, you can't do any of the other stuff. So I think that's why it's important we need to do it now. But where do you start? The best place to start is with your people. Understand how their days work, understand how they interact, and understand your customers, understand how they want to react. And if you start there, rather than starting with the MI that you want to see out of it or the database design, you have a much better chance of being successful, I would think. Not being a technologist, that seems really simple, but I recognize from all the failed implementations that I've seen that it's quite hard. So the other thing to really think about is that this will be just as much about the people in your organization as it is about the system that's built. If we take wealth as the example again, you'll be dealing with a Salesforce set of advisors that perhaps aren't as comfortable. They've not seen the value in systems like this of bringing people along and designing something that really makes their lives easier, makes their jobs more efficient. That's the best place to start, I think. And that's true if you have a CRM, or if you don't have a CRM. If you have a CRM, look at the one that you have and see what you need to do to optimize it. And if you don't, obviously start with that clean sheet focused on customers and your people. And I think if you do that, then you can have a system that is simple and intuitive. You shouldn't need weeks and weeks of training and a black belt and screen toggling to navigate the core processes.
We covered a lot of that stuff off as well in our podcast around user adoption. We talked about making things really simple and making things that actually help people rather than them having to serve the CRM. The CRM serves them. Yeah,
it's amazing because it is so obvious, but so difficult. So difficult to do. You see it in so many places. I think that simple and intuitive approach, the flexibility in this technology now, all of that stuff is easy but difficult. So it just takes that, I think, that focus and that hard work, and the right partners to work with to make sure that you're doing the right thing.
I would say probably strong leadership as well, especially for the larger organisations where it's probably more of a challenge to implement that change and digital adoption if that's not something that's being a natural part of that organisation. There will be resistance from certain types of people.
Always. Yeah, I think that leadership right from the top is incredibly important. The commitment that you're not going to compromise on usability. That's one of the primary goals, not a secondary goal, not a tertiary objective of the whole exercise, but that's what you're focusing on. And that does take a lot of leadership because it's probably easier to build it the other way. I don't know that for sure, but I'm guessing that the harder thing to do is actually to talk to the users than actually just plug something in out of a box.
Yeah, exactly. I mean, the easiest option is just to do it yourself and deliver it, but it's not going to be used.
Yeah, yeah.
If you don't engage with people.
No, exactly. It's not being used by anybody. I think that's one of the other things that is kind of obvious, but you want it to be plugged into the rest of your infrastructure, but that's difficult. That's hard, and it's complex. But that hard work, I think, allows you to build on that core customer data set and do all the other cool things that you're probably talking about it at your exco meetings.
Yeah, in some of our previous episodes, we've talked about what's a good project and the steps that you'd go through to define your team, etc. So it's worth a listen if you've not listened to that yet.
Yeah, I know when we started talking, it was that commitment to simplicity, to making it simple, that resonated so strongly, because you rarely hear that in FS, actually. Yeah, although we need it more than anybody, I think.
So, Chris, is it just the larger providers that this is applicable to, or is it all sizes that need to be thinking about their systems and their CRM?
It's a good question. I'm going to argue that it's just as important, or perhaps even more important, for some of the smaller players in the value chain, some of the medium-sized, smaller distributors, to look at their CRM approach. People other than the big providers, it's that much more important that their customer interactions are as productive as possible. People typically have less resources they can commit to dealing with the BS, the administration and the follow-ups and the stuff that really shouldn't happen but does. That's where a simple and intuitive CRM can help streamline things and automate, the things that are less value add. I think another really interesting point in this sector is the space that the wealth and investment platforms have played. They've been very much focused on the investment management aspects of the day-to-day life. But there are very few solutions out there that have really helped to automate and manage the end-to-end customer lifecycle, from prospect to onboarding to ongoing interactions and management. And it gets just that much more complicated when you look at multiple platform relationships or on and off platform products. It really gives those advisor firms the ability to manage that whole lifetime customer relationship. So I'd say it's just as important in summary, but obviously the cost benefit is different. So you need to strike the right balance and ensure that you've got something that's built for you, not something that's built for, a widget manufacturer in Tennessee.
Yeah. I mean, Chris, it just sounds as though the whole industry is shifting to just a much more customer-centric focus these days. That theme of people and users and customers, it seems to be just popping up, which is something that obviously Rocket CRM are very familiar with. Everything that we do is built around the users, the customers. It's about looking at how those processes facilitate that. It's easier said than done though, isn't it, Chris?
It is. The industry's been talking about customer centricity for years and years, but I think failing to really grasp the nettle. But hopefully now we're seeing a change. I know advisors would like to be able to spend more time focusing on their clients and less on admin. I know clients would like more value, from their relationships, the ability to interact in the ways that they want. It's time to focus on getting it right.
Definitely. And it's never too late. Change is ongoing. So people shouldn't be feeling as though they're behind in any way. There's still plenty of time to be able to start the ball rolling. If there's somebody out there listening at the moment thinking, they know that change is needed in their organisation and they have the power to be able to move information to the powers that be, what's the best thing that they can do to begin with to get the ball rolling?
It's a good question. Just starting by talking about what good could be is a great place to start. If you're a senior exec, sit with your distribution team, sit with your ops teams. If you're in a smaller firm, you'll be much more intimately aware of the pain that you're going through. I think then just focus on the fact that this can be simplified. There's models out there that make it a lot simpler. And of course, I think we'd probably say call Rocket CRM. But obviously, I think it's about understanding what good could look like, and then hopefully moving towards it.
Fantastic. Thank you so much, Chris. That's been incredibly insightful, valuable, and we would probably love to bring you on again to dive in a little bit deeper, because I think there's so much more that could be said. But for now, we'll say thank you very much. If any of our listeners want to contact you, what's the best way to do that?
Best way is, I suppose, through my email, which is info@hesmur.com, or via our website, www.hesmur.com. And I'd be happy to have further chat.
Are you on LinkedIn as well, Chris?
And LinkedIn as well, yes. Definitely LinkedIn as well. All channels open.
Brilliant. Okay, well, what we'll do, Chris, is we'll pop the URLs and any contact information into the description of the podcast for anybody. We'll also link some of the useful articles and previous series as well. But thank you very much, Chris. I think just to wrap things up, what we can see, it's an industry going through significant transformation at the moment for the good. Obviously, the regulatory changes, digital adoption, and rising customer expectations means that, especially in wealth, they've got to change, haven't they? They've got to know their customers better. They've got to deliver better customer experiences. They need a joined up approach, and that CRM tech is a facilitator of making those positive changes wrapped around the customer, but also making the users of the system, making their lives easier. You talked about these systems being built around the people as much as the processes, as well as the customers. And so it is possible. I think you've made it very, very clear that the solutions are out there, that the old way of doing things and all CRM systems doesn't need to continue harming these organizations, and that they can start to really build agile, data-focused, customer-centric CRM systems to help them grow, basically, and succeed. Brilliant. Thank you so much, Chris.
Thank you, Chris.
Thank you, Chris.
This has been the RocketPod podcast, delivered by Rocket CRM, the place for spot-on CRM advice delivered in a simple-to-understand format, as Rocket CRM makes CRM simple. The show was produced by the team at Rocket CRM and Thumbs Up Marketing, with special thanks to Alex Tilbrook, Design and Illustration, and MD Hammond. For information on Rocket CRM, visit rocketcrm.co.uk, and you can also follow us on Twitter and LinkedIn. Twitter's @RocketCRMUK and LinkedIn @Rocket-CRM. Thanks for listening.